Hello class, and welcome to our today's lesson on bank reconciliation statement. In our today's lesson, we are going to see the second type of question which you can be asked in an examination setting. Therefore, I want you to pay attention as I take you through. There is that question that I posted on your platform, which is saying that you are currently employed in a company and deployed in the accounts department. Your head has given you an extract for the cash book, which is actually shown here. The receipts during the month were totaling this, 2,938,000. The balance brought forward from the previous year was 1,522,000. Balance carried forward to the next period is 1,108,000. And the payments during the year was 2,524,000. One thing you need to note is the position these balances are. The balance brought forward is on the credit side. This simply means that by the time we were starting this particular year, we had a bank overdraft. Similarly, at the end of this year, remember this balance carried forward is on this side, meaning that the credit side is higher than the debit side, which simply means that it is another overdraft. So this balance, by the fact that it is here, it should be treated as a bank overdraft, which is actually a credit balance. So the head of section further informs you that all receipts are banked intact and all payments are made by check. On investigation, you discover the following. Number one, bank charges and omissions amounting to 272,000 entered on the bank statement had not been entered in the cash book. By the fact that it is missing in the cash book, therefore it is used to update the cash book. Let me take you through before we go to the solution. Checks drawn amounting to 504,000 had not been presented to the bank for payment. These automatically are unpresented checks, which we normally use in the bank reconciliation statement and not to update the cash book. Checks received totaling 1,524,000 had been entered in the cash book and paid into the bank, but had not been credited by the bank until May 20, 2003. This is uncredited checks. Again, uncredited checks will appear in the bank reconciliation statement and not in the updating of the cash book. A check of 44,000 had been entered as receipt in the cash book instead of payment. Remember this is an error in the cash book, which simply means that we need to rectify this particular error. Because this check was a receipt and it was instead entered as a payment, it simply means that it should be recorded on the receipt side, but double. It should be recorded on the receipt side of the cash book, but double this amount. Why double? The reason why we are doubling this amount, remember, as we correct this error, there's 44,000 which is on the credit side, or the payment side. To remove that, we need to debit by 44 so that we can remove it, can cancel out. And then now we put another 44 now on the receipt side because it was supposed to be captured. If we put 44,000, we could have canceled the error, but this amount would not have been posted where it belongs. So if the first 44,000 is to cancel the 44,000 which is on the payment, and then another 44,000 now is to be put there because that's where it belongs. A check for 50,000 had been debited by the bank by mistake. This is an error by the bank, which is actually increasing our bank balance. And any error that is committed by the bank and in the bank statement should be corrected or should be captured in the bank reconciliation statement. A check received for 160,000 had been returned unpaid. When you are told that the check has been returned, whichever the reason, that is called the dishonored check. So the moment it was received and now it has been returned, once it was received in the cash book, it was recorded on the receipt side. Because it has not been accepted by the bank, we also need to remove it from the cash book by crediting the cash book by 160,000, with the dishonored check. Another case that we have here, number 7, all dividends receivable are credited direct to the bank account during the month of April 2003. Dividends totaling 124,000 were credited by the bank and no entries had been made in the cash book. So these are direct credit. And because they are direct credit and they are not appearing in the cash book, then we should capture them in the cash book on the receipt side as 124,000. A check drawn for 12,000 had been incorrectly entered in the cash book as 132,000. This is another error that has occurred in the cash book, whereby this check, instead of being written as 12,000, and remember it is drawn. Drawn here means that it is a payment. It was entered in the cash book as 132,000. This is an overpayment. Because it is an overpayment, we shall cancel that overpayment. The difference between 12,000 and 132,000, which is actually 120,000, should be debited because this check was a payment and we recorded an overpayment of 120,000. That is 132,000 minus 12,000. That overpayment of 132,000 should be debited in the cash book so that we can cancel out that error on the payment side. The balance brought forward should have been 1,422,000. This balance brought forward here. Instead of writing 1,422,000, we wrote 1,522,000. So we had overpaid, or we had over carried forward this figure by 100,000. That figure now should be appearing here so that we can minus it from here. I want to repeat here. Once the figure is appearing on the credit side, to minus it, you record it on the opposite side. So we are minusing 100,000 here by putting it on the debit side so that we can cancel that error. The bank statement as at 30th April 2003 showed an overdraft of 2,334,000. This is a balance as per the bank statement, and which is normally used to compare whether you have done the correct thing. Let us go now to the solution. The solution is here, the adjusted cash book. The adjusted cash book. So we have the balance brought down. The balance brought down is actually here. The balance brought down is this amount that we normally use. We normally use the closing balance, this one. This is the balance brought down. And because it is a credit balance, once it is recorded on this side, it simply means that the credit side had more than the debit side. Once it is appearing here, it simply means that it is a credit balance because it is the credit side which has got more than the debit. That's why it was recorded here to make the debit to be equal to the credit. So 1,108,000, it is that figure that you can be able to see captured here. Bank charges were missing in the cash book. That's why they have been included here. Then we have got the error in the payment of the check, which is actually supposed to be here. And then the dishonored check, we have said it's supposed to come here. Dividends received, those are receipts which are supposed to be captured here. Error in the payment of check, which is supposed to be here. And error in the balance brought forward of 100,000 is supposed to be captured here. And then now you get this balance carried forward, which is actually the balance as per the updated cash book. And remember this balance, it is an overdraft. An overdraft simply means that you have got negative amount in your bank. That's why when you come here, this figure must be put into bracket to signify it is a negative. Then you add the unpresented checks, which are amounting to this. You get this figure, and then you raise uncredited checks, which are amounting to this. Don't forget to minus the error that was made in the bank, which is actually increasing our bank balance of this amount. And now you get 2,324,000, which you need now to compare with the figure that you have provided here. The figure that you have provided here should be actually the same. So when it comes to bank reconciliation statement, it is very, very clear. What goes to the updated cash book are only items which are in the bank statement but missing in the cash book, or errors that were occurred or errors that were effected when preparing the cash book. Unpresented checks and credited checks, they should never appear in the cash book. They should never appear in the updated cash book. They should wait up to the point whereby we shall be preparing the bank reconciliation statement. Very clear. And note here, when it comes to an overdraft is a negative balance, and anything that is negative in accounting we normally put in brackets. So don't wonder why is this figure put into bracket. It is put into bracket because it's a negative. Any figure that we minus, it is actually supposed to be into bracket. And then now you can proceed. And note here, we have got the two formats that we normally use in preparing the bank reconciliation statement. But more often than not, we normally apply this one, which is now the moment we have obtained this balance here, which is actually the balance as per the updated cash book, should be brought here directly. And now we add the unpresented checks, then we raise uncredited checks. Errors that reduce the bank balance. If, for example, the bank had made an error of reducing our bank balance, it should have been added here. It could have been added here. If, for example, if it is an error that increases our bank balance, which is actually the case that took place here, it is normally subtracted together with the uncredited checks so that we can get the figure here. I want to repeat here. When you are preparing the bank reconciliation, look at things like the bank charges. They will be, in most cases, be missing, and you credit them here. And the reason why we credit them here, it is because they represent payments. It is money moving out. Look again for things like the standing order. Standing order, you'll find that it is going to be missing in the cash book. You also put it here because it's money being spent or money being taken from our account to pay another account. Look for dishonored check. It is going to appear here. Then on this side, look for the direct deposit, dividends received, and anything that normally signifies money coming into the business. If that money is coming into the business, then you should capture here. If it is going out of the business, but not in the cash book, you put it here. At the end of the day, you balance it and then you bring that balance as per the updated cash book here. Another thing that I want to emphasize is on this balance brought down. Anytime you are starting an adjusted cash book or updated cash book, always start with the closing balance as per the cash book that you are given, or the cash book extract that you have been given. That amount of money should always start here. Either it is on this side, if it is a normal cash book whereby the bank balance has got is positive. If the bank balance is positive, this balance brought down should have appeared here. If you are not told whether it is an overdraft, it should appear here. If, for example, it is a statement form where you are told the balance as per the bank column of the cash book is this much, and there is nowhere you are told it's negative, always bring it to be on the positive or the debit side. And then if it is an overdraft, just bring it on the other side. You balance it off, and then you see this figure here. In the question, you'll always be told the balance as per the bank statement. The balance as per the bank statement, that figure is not used in most cases. If you start with the balance as per the updated cash book, that figure should only wait, and then you confirm whether actually the balance that you have obtained at the end of the day here in the reconciliation is similar to that you are given in the question. And the moment you find that it is similar, then you are okay. Actually, you have hit the target. Your work is to make sure that this balance as per the bank statement that you get here, it is equivalent to what you have been given in the question. And once you have it correct, then you should be there to celebrate, because actually that question has been done right. I want to stop there and encourage you, find as many questions on this particular area and attempt. They are very, very much examinable, and at the same time, very easy to score. These are actually the marks that you should maximize on whenever they appear. It is going to be tested in either way. Yesterday, we looked at a case whereby you are given an extract of the cash book and extract of the bank statement. Today, we have looked at a case whereby we are given an extract of the cash book, but you are given statements here. So from these statements, we were to identify the items that are in the bank statement but missing in the cash book, items that are in the cash book missing in the bank statement, and the errors either the accountant made in the cash book or the bank made in the bank statement, and then we proceed and prepare them. So it is quite simple. Identify errors that are made in the cash book and the items missing in the cash book and update the cash book using those items. Then take the unpresented checks, uncredited checks, and errors in the bank to the reconciliation part. And then you find that everything becomes very easy, and then it flows and you get the correct answer. Let me stop there. Enjoy your moments. Asante.